Folks, I got to hit you with a hot diggity dog. You know I love a hot diggity dog. We're back. Sorry for the lack of content. It's just been unfortunate. Need to produce some more here for you, and I'm going to start here with a little something different. This one is something we've done in the past, and we're going to bring it back. Try to do it every week. In my opinion, the biggest news here, news stories of the week. I'm going to bring them to you. Things that I think are worth looking at and seeing what they might do. So could be relevant here, but this is going to be the stock market news here for this past week. Hope you're excited, and we'll see what happened. We're starting with a relatively weird headline, right? We had a lot of economic data. Obviously, we'll get into that here too, but we're starting with a just kind of an interesting one I wanted to point out here. Walmart being the biggest retailer, brick and mortar in America, biggest retailer in general too. They are officially opening a police quote-unquote workspace, as they decide, or as they've defined it, in in an Atlanta store, in order to deter shoplifting. So what exactly does this mean? Well, it's in Vine City, which, let me just tell you, all I can tell you, you can see here, set on fire late last year. I mean, I can just tell by it being called Vine City. I got a bad feeling this is a kind of a sketchy place there. Anyways, what this means is officers will be able to fill out paperwork and hold meetings in there with particular spaces, in addition to charging their phones and body cameras. I don't know, that's kind of a weird thing to say there, but basically it's just going to give them a reason to be in the store more. I mean, some of these high theft area Walmarts already have like bodyguard or people that staff. There's either staffed guards or police officers are naturally just there. As part of like a regimen that they do, they've worked through with the local PD. So this is just kind of another excuse there. So let's hope this does something. I'll tell you, theft has just been continuing to increase at all these retailers, and maybe this is something that sticks with a couple more of them. Again, people are still going to conceal stuff, steal stuff as well. Not everyone's super brazen about it. It's just the issue is you get a lot of these cases lately with social media. It definitely explodes it too. These mass just stealing epidemics where all these people just decide to just go in and take TVs or full carts full of stuff, and it's like, come on now, get out of here. We'll see what that does for Walmart. Obviously, it's not something that really costs them anything, and it could potentially benefit them from a perspective of loss and giving up item through shrink or theft, as some might say. But yeah, that's just an interesting headline to start it. Next one, we have really a very well, well awaited. Everyone was looking forward to it. ARM Holdings did IPO here this week, and it jumped 25% in the first day of trading, which gave it a valuation of $68 billion, which is a wild valuation, by the way. I must point that out. We're talking about a company with $2 billion in revenue annually last year. It's an incredible valuation, but it's a very well-awaited, highly anticipated IPO, so I'm not shocked there was this jump. I don't play around with IPOs. I mean, most of the time you get into these, and let's be real, we get this jump on day one, and then all these extra people start buying in because they're thinking it's going to keep going higher. And then eventually you look, 3 months down the road, and the thing is half the price of what it was. So I don't typically mess with IPOs. Not saying this one will do that, but it's a possibility. You don't see just a 25% jump, and terrible valuation, and it still do great things. But we'll see. Kind of a more generic detail here that I wanted to point out. S&P 500 buybacks in Q2 declined 18.8%. And again, I'm not too shocked about this either. So what's really driving this? And this is going to be the 500 biggest companies here, in the United States. What does this mean here? Kind of looking finer details, 304 companies reported buybacks of at least 5 million for the quarter. So it's not saying that companies are no longer doing buybacks, but we've seen this year stocks have certainly gone up, in terms of price. S&P 500 is up a good 20% here annually, right? That's pretty significant year to date. And you look at this from a one-year stack. Last year, the market went down, and it went down, pretty decently, pretty significantly down. And there were a lot more buybacks at that time. So seeing these declines in buybacks does not shock me one bit. Stocks have, reached, a bit of a higher valuation in some senses, some even overvaluation, some still trading ridiculously cheap, and those ones are offering pretty decent buybacks as well. One of which I actually point out later in this video, you'll see. So, yeah, definitely interesting to see there. Information technology regain the lead in buybacks, which is not a shocker. These are ones that are actually trading at pretty decent valuations to begin with, but they've also generated a ridiculous amount of cash flow here in the last year that they're using it towards buybacks, which makes sense. Definitely beneficial for the shareholder, and just overall, good for the company in that sense. Less stock outstanding is definitely beneficial for them. So something I wanted to point out there. Then we had a big piece of economic data being the CPI, and this one definitely, in my perspective, was pretty upsetting. I think investors have widely brushed this off, but CPI actually rose yet again. So the rate of increase has risen another, another decent amount here. It was up 3.7% when you look on a year-over-year standpoint, which is crazy because it's already up massively when you look 1 year back. CPI was also up, massively back then. So this 3.7% represents an even higher percentage than what it did, even just a year ago, right? That's what people don't think about this, just hypothetically, it's a hypothetical situation. This isn't the case, but 3% of $100 is a lot different than 3% of $1,000. Obviously, it's an extreme example, but one's a lot lesser than the other, right? So that's something to be considered. As this continues to increase, the fact that the rate of growth is actually relatively, whether it be flat or in this case, it's actually increasing, it's even worse on the consumer. Now, here they're going to say fueled by gasoline and housing prices. I think that's an incredibly misleading and, it's a misleading headline. It just really is. I get it. It's a pun. I'm not stupid here. It's a pun. But the concerning thing is we still see increases in every single pricing point. So, terrible, by the way. Consensus was 3.6, is above that. It was only 3.2% in July, up 0.5% from there. Biggest price increase now was gas. So to be fair, it was the biggest price increase, rising 5.6%. But the food index also rose 0.2. Now that's not a massive amount. Let's be real, 0.2%. But again, it's something. Why is food still increasing? Why are we still seeing growth in CPI there? And what this means for me, just in my perspective, it means we're due for at least one more rate hike this year. There's still decent consumer spending data. Consumers are still spending at very good clips. And what that means for the Fed is if we're not, destined for recession here, which doesn't look like we're necessarily destined for a terrible, disastrous recession, because consumers are still spending, what they're going to have to do to cool down inflation is raise interest rates. I would presume, my estimate is one more time. And that's probably it. So we'll see what that looks like. But it's concerning for me. I just don't like that we're still seeing increases all around the board. It's just not exciting for me. I think at some point we got to start, we're kind of flattening it, I guess, but it's got to start decreasing at some point. You're just killing the consumer here. Wages are not, CPI is outpacing wage growth, which means the American consumer is just getting killed out here. That's all I got to say about this article. So, anyways, again, as I mentioned, retail sales stronger than expected came out the day following the CPI data. We did see 0.6% increase, and obviously economically that's good for us, and it's great for the GDP. I mean, the American consumer is still spending. The issue is a lot of it does occur with money they don't necessarily have. And I say that to an extent where you see, credit card delinquencies and charge-offs at record highs. I mean, we're seeing $1 trillion worth of credit card debt here in America is a significant amount. So yeah, I mean that's something to note, and as people continue to spend more, it definitely it's one of those weird metrics where when we're in a state like this, it's almost more damaging to see increase, in the consumer being this strong, an increase in sales. Um, because people are spending money they don't have, and it hurts them in the long run, right? People need this money for house payments that are definitely, increasing, rent payments that are increasing, utilities payments increasing. Everything is increasing, and as they continue to spend more and more on just generic goods, it definitely hurts the American consumer in the long run. Just we can see any data point that will prove that. It's just how it is. Um, but yeah, I mean that's something to note. Next article here is another massive one here too, and we see the strike occurring here at Ford, GM, and Stellantis. Now, um, the big three here, it's quite concerning here as the UAW, United Auto Workers Union, I think. Look, let me tell you, I've dissed unions forever, and I will continue to diss them. Their demands are quite incredible. It's insane. I mean, they're expecting some 20% increase annually in their pay in a year span. I mean, what does that even mean? In over a year over year, you're going to grow your earnings 20%. What about the companies? What's the point of these companies even operating here in the United States if you're going to have to every contract period, every few years, increase your employees' wages by 20%? We're talking about, annualized, nearly 7% annualized wage growth is significant. And it really hurts these companies. And you get this clown over here, I'll throw out some names, saying that these companies are quote unquote record profits need to be given to the workers. That's the point of opening your business and running it. It's to make profit. It's not to stay net neutral. That's something that we call socialism, where that's what the government's job is to do. But the government's making the profits. How does this make any sense? You're okay with the government making profits, but actual companies that started from the ground up, they can't make profit? I don't get it. It's just in my eyes, it's just an absolute clown world. Um, I don't know. Look, we'll see what happens here, but kind of annoying. Meanwhile, Tesla's licking their chops because it's a big hit here for Ford and GM. Obviously, Tesla's gonna continue to eat up market share, lick their chops in this facet. So, hey, all I gotta say is unions are clowns usually. Um, UAW being one of them, unfortunately, absolute clowns. And that's what they are. And on top of it, guess what? Ford laying off about 600 in relation to the strike. Um, Needs to be noted, there is a company statement. They changed this to there. So this is not a lockout, said a Ford spokesperson, okay? The layoff is a consequence of the strike at the Michigan assembly plant. Um, and because the components built by these 600 employees use materials that must be e-coded for protection. So it's going to be completed by the paint department, which is on strike. So basically, like I said, what you are doing here, not only the president, but the union, you are driving American jobs out of the country. That's what you're doing. That's what you're doing here. You're gladly doing it too. You're absolute bums. You're going to get people to lose their jobs, and unfortunately, companies are going to outsource. It's what's happened all over the place. All these places are outsourcing labor outside of the United States because people aren't fine with, a normal wage growth. I mean, 20%? What is going on here? Anyways, that's what I got to say about that. I could go on forever about that. Our last one is about buybacks, actually. As I mentioned, Valero. You see, energy stocks are ones that are incredibly, they haven't taken a big jump in valuation compared to really the entire market, except for financials. And here we go. Valero is taking advantage of that, and they've authorized a $2.5 billion stock buyback. How about you suck on them apples, baby? I said apples. I was about to say nuggets, tempted to say nuts, but I didn't. I was pretty good. I still said it just now, but hey, Valero, That's a massive buyback if you're owning the stock. Pretty nice for it, obviously. Makes your not only your vote but your share of the company even more valuable. That's what I got for you folks. The news for this week. I hope you enjoyed and hope you have a great rest of your day. Bye bye.